Yesterday, that CPI report came out. The markets didn't like it, and there was a big fumble. But today, that price action ball, got picked back up, and it's been running strong, and we're heading towards the end zone. Guys, this is the Stocks with Josh show. As always, I appreciate you showing up, watching this video, supporting this channel with the likes, saying hi in the comment section. And if you're new to this page, hit that subscribe. We're always diving into technicals, upcoming hot stocks, and we're going to be covering some crypto today. There's a lot to go over. I'm going to take it step by step. I do have a stock I want to highlight to you guys today, and I'm going to give you some of those promised technicals on an important crypto. Before I get into the meat of my video, I just wanted to quickly talk about the Discord. The Discord is the Stock Squad Patreon. That's where myself, Stockmo, Keenan Grace, and Stock Up with Larry Jones are answering questions, sharing technicals, and giving upcoming plays. Now, I wanted to talk about the old analogy of a crab in the bucket. If you put, you guys have heard this one before maybe, if you put a single crab in a 5-gallon bucket on the beach, they will find their way out of that bucket. They will scurry up and over and back to freedom fairly quickly. But if you put more than one crab in that bucket, then none of them get out of the bucket, because when the first one begins to make the move, all the other crabs begin to latch onto him, grab and pull at him so that he can't get out of the bucket. And then the next one makes his move, and all the crabs scurry to try to climb onto his back so that he can't get out of the bucket. And you say, okay, Josh, what is this analogy today, and how does it have to do with Discord? Someone made a comment yesterday about what they perceived the value to be or not to be in the Discord. Many of the trades that I've put in there, I've made thousands of dollars on a daily basis. And so I know the value of the information that I'm sharing. Now, I want to be straight with you guys. I'm not putting every single trade, every single investment, and every single thought on that platform. But I do get on there every single day and share things that are interesting and exciting to me. And I do respond. People asked me to chart ARM today, and that actually became the basis of today's video, my charting of the stock ARM, ARM. And what's happening with that, it's doubled in value, and I gave some thoughts as to how it might proceed from this point forward. Now, I'm going to break down a stock that might be a better investment than ARM. We know that NVIDIA has gone up 175% in the last 12 months. ARM has doubled in value. Palantir has doubled in value. I recently talked about that. I'm interested in accumulating Palantir, but it has to come back a little bit. And the same could be said about ARM, and the same could be said about NVIDIA. I'm going to be giving you guys a stock that might have more room to the upside in that particular space here in just a minute. But I wanted to give you guys that visual of how the crabs in the bucket will keep the other crabs from getting out. And that's what I see sometimes in the comment section. I see people that are stuck somewhere. They don't know how to get out. They often don't want to do what it takes to get out. And those who are getting out, the only thought that they have to contribute is, let me grab onto them and keep them from getting out. Guys, I think the Discord is a place to possibly get out and get into a community where you're able to get more help from other like-minded investors and the Stock Squad team, which has a lot of value to offer. So check it out. Click on the link in the top pinned comment. Now, all right, let's cover the markets real quick. They rebounded today from yesterday's down day, and it was NVIDIA and Meta that were leading the way. Here's what's being reconciled in the market right now. As I've said to you at the beginning of the year, the market had priced in 6 to 7 rate cuts. The Fed has said there's only going to be 3. Right now, it seems as if the market has settled on the idea that there's only going to be 4 rate cuts possibly in 2024. Now, I'll be honest, I'm surprised that we haven't had more of a pullback on that realization. But the reason there hasn't been a bigger pullback on that realization is that the reason why that's happening is because the Fed is saying this market, this economy is strong, and these companies still have room to run the ball all the way into the end zone and make a touchdown. They're going to have another good year. That's essentially what the Fed is saying when he's telling us he's not going to cut rates a lot this year, because there's no need to, because the economy's strong. He's keeping an eye on the data. So the odds for a rate cut in May dropped to 35%, but the odds for the rate cut in June went up to 51%, which is still just 50-50. And that's telling me that the Fed and the market makers both think that the market's got room to run. And I want to remind you guys that when the Fed eventually cuts, that's when most people expect that there could be a 20% correction from the current up move, which means that we could continue to climb from here and fall back later later in June. And then yesterday, I pointed out the potential ominous, bearish, engulfing candle on the weekly chart. I told you guys that we needed to keep an eye on how it closed. Well, it's come up from yesterday, and this candle, which started off yesterday looking bearish, could actually end the week looking like a bullish hammer. And so we'll talk about it again on Friday. Right now, it's heading in the right direction, giving us a potential second weekly bullish candle to follow the markets higher. So I wanted to also cover some interesting news that was quite surprising. So you guys saw that Lyft took off. The stock skyrocketed up 60% after earnings. And now there's the commentary that there was actually a typo in the earnings report, which caused a lot of bullish optimism for the stock. Since then, it's been corrected, but the stock has only pulled back from its up move, or you could say it's up now only 30% today, which that move was absolutely incredible. If you were able to take part of any of it, you made a lot of money. But here's the warning I want to leave you guys with Lyft. I think there's a lot of bullish momentum pushing stocks up right now in an irrational way. And the fact that the market could push Lyft up 60% on earnings is a reflection of how the market's money is flowing from one earnings play to another. Now, this is going to tie into an opportunity I'm getting ready to share with you. But in regards to Lyft, it's a warning. I think that Lyft stock price could come all the way back to $12, where it was right before it took off. And so just be aware of that. All right, let me take a very quick station break for the Moomoo investment app. I want to remind people out there that Moomoo is currently offering up to 8.1% for just putting cash in the account. You don't have to invest it in anything. You just load your Moomoo account with some cash and they'll pay you 8.1% month over month for 3 months, as well as the fact that if you put in a nice sum of money, they'll give you up to 15 free stock. And so this is a great no-risk way to build a future trade account. Guys, I want you to click on the link and see what offer is available for you. That's the US offer. It's available in the US, Australia, and Canada. You can get some free stock, you can start earning some interest, and you can trade with better trade tools. Check it out. So as I said to you guys, right now, there seems to be two different markets. There is the small cap market, which has largely been moving flat. It's not been participating. It's what's been talked about, the fact that there's no market breadth. And then you've got this secondary market. It's basically the AI-driven, tech-driven market that seems to have no limits, no caps, making all-time highs, going up 1x, 2x, and just having an incredible year in 2023 and an incredible year in 2024. It doesn't seem like there's anything stopping NVIDIA. It seems to be single-handedly pushing the NASDAQ higher and the S&P 500 higher. It's been on an incredible run. But we do know that this will eventually end. I'm not telling you to sell your NVIDIA right now, but I am telling you that a lot of money's been pushed into it and people are beginning to look at what the next hot play could be. They're looking to take profits in this incredible run up and possibly put them somewhere else where it's yet to run. And that's why we saw Palantir take off the way that it did. It's also why we saw ARM take off the way that it did, because people have been making money in this space and they're looking for the next heavy hitter. We saw that both of them doubled in value and had incredible moves up. And so that brings us to the question, where is another area where we could see another big pop where money might flow into? And just like I said about Lyft, people are just irrationally throwing money at any positive news in this market right now. So who is next in this possible big move? Well, I've identified the tech-focused business service sector, and I think one of the best companies in that sector is Spotify, ticker SPOT, Spot. These guys, now, they've not been lagging. They're up 259% since their October 2022 lows. And so this has been on a very strong climb. But when you go and you look at the historical view of the chart, you realize that there's plenty of room for it to go back to all-time highs. And it's in the right industry, in the right sector. And it may be the right stock or the next right stock pick to participate in this crazy enthusiastic market and give the investors another touchdown. So the next question we have to ask ourselves, is it cheap? Is it expensive? Because we just said it was 250% up. And here's where the game becomes interesting. It actually has a pretty decently high price right now, but then when you go and you compare it to what just happened with Palantir, and you go and you look at the forward earnings per share, it actually begins to look cheap. And so right now, when you're comparing it against where Wall Street put their money, you realize that there's room for them to put some money over here on Spotify. Spotify's earnings per share are expected to be up 48%, and that exceeds the industry average, as well as exceeding Palantir's projected earnings for 2024. Now let's dive into the charts and let me show you guys what I see over there. I think we're in a critical price range between 235 and 243. And so I like it when stocks become clear to me and when we have clear points of control. And as some of you guys who follow me in the Discord, I trade Tesla every day. I try to collect a couple $1,000 out of the Tesla ATM. I don't care whether Tesla goes up or goes down. I find my price range and I go into calls if we break above it. I go into puts if we break below it. I gave another trade this morning and it was a nice, beautiful winner. So my trade range for Spotify is on the low end, 235, and on the high end, 243. That's where I think the price action is going to move. I think if we close on the daily time frame chart, we need 2 days above 243. I think we're going to be pushing much higher. And if we close 2 days below 235, I think the party's over and we're going to be going much lower. Now, I have no reason to believe that we're going down. And you say, well, Josh, how come? It looks like the stock's already come up quite a bit. Well, one, if you just look at Meta and Nvidia and how Wall Street wants to reward the right stocks right now, you realize there's plenty of room higher on Spotify. But let's go and look at the charts and let's look at the price action. The fact is we have the 2 last week candles. So the week that we're in and last week, both of them look incredible. We've got one real tall-bodied candle, and then yesterday on the dip, Wall Street came in and absolutely bought this one up. It came down to $228, and they gobbled it all the way back up higher, giving us a potential hammer candle today, another bullish candle. So before we go all in on Spotify, let me tell you guys what I expect to happen. We just had another big leg up. I think it's largely going to move sideways in that range I gave you. And so this is one I want you to put on your watch list. Let me know in the comments if you think it's worthy of your watch list or if it's one that you would consider investing in long term. And I want to remind you guys that we're looking at percentage growth. So you say, Josh, I've got a small account size. This wouldn't be the one for me because it's an expensive stock. Well, one, you can buy fractional shares on Webull and you can get a huge percentage gain. It's better than putting your money into one of these small cap stocks that have been dying slowly, a slow death. And I'm not going to throw out any names to hurt anybody today. But the fact is we see some stocks that are only slowly bleeding off. When here you have a stock, it doesn't matter if one share costs you more than $200, the percentage gains keep going up. And I see another 30, 40% possible in this play. And so that's what I want you to keep in mind. So sideways between 235 and that 243. If we get above that 243, like I said, my immediate target is 260. And then by mid-year, my target becomes $320. And so as you can see, plenty of room still for this to go up. Now, here's what I want to give the more experienced or intermediate traders. What buy signal am I going to be looking for when we begin to move sideways? Is there any place where I might get in early on support? And the answer to that is yes. I want you guys to look at the RSI on the daily time frame. We're up in sort of an overbought area, and it would be reasonable after having come up this hard, it would be reasonable to come back and back test the middle of the range at 50%. Now, when you go back in time, that's proved to be the perfect spot to get into this stock. And again, if we come back and we hit that 50% mark, then I think we could skyrocket again and have another big push up. And if you guys hit the subscribe, you'll likely hear me share that with you. Or if you join me over in the Discord, you'll likely hear me share with you guys when that happens and when it becomes ideal to buy this stock. So right now, sideways move, put it on your watch list, possibly a $320 stock by May Q1 earnings 2024. All right, let's talk about crypto. What is going on in the crypto space? You know the markets are hot right now, and Bitcoin has made a new 52-week high, but so has Ethereum. For the new people here, let me just remind you guys, that Bitcoin changed money forever as a store of value, and then ETH came along, built on the concept. It's not a competitor to Bitcoin. It does something entirely new. It gave us smart contracts. It's got the first mover advantage, and as we know, they're the second most valuable crypto project after Bitcoin as far as market cap goes. They're also the front runner of DeFi, which is decentralized finance. It's a legacy blue chip crypto, and it's on the move. So far this year, it's up 28% from its pullback. In December, it pushed up. At the beginning of January, it pulled back, and since then, we're up 28%. It's absolutely hitting new 52-week highs, just like Bitcoin, and it's not one to ignore. So today, I'm going to keep my technical analysis simple, and it's more of a warning for folks that are in crypto and waiting for the pullback. Here's what I think is happening. I think the pullback that we got in January might have been the pre-halving pullback. And you say, well, Josh, how come? I mean, everyone was expecting a much bigger pullback than we got. This doesn't quite make sense, and I would agree it doesn't make sense, and there's two takeaways. One, it means that since we didn't retest structural support for Bitcoin and even Ethereum, it means that the run-up may not be as strong because we never tested support correctly. It may continue to run up, but that run-up may not be as strong as some people expect. That's the first conclusion. The second conclusion is that we obviously know that we have large hedge funds, investment companies involved in crypto right now, and they may be manipulating it pretty significantly. It's not a rug pull, but here's the warning that I see in it. It seems to me that what should have happened at the halving event is happening before the halving event, which causes me the concern that they are going to create the biggest FOMO moment, because everybody that didn't get in the winter and is seeing or waiting for this pullback that never comes or wasn't as strong as some people expected it would be. A 20% pullback is not that big of a deal in crypto. Normally 30, 40, even 60, 70 can be normal. And so a 20% pullback just didn't seem like enough for a lot of people. That a lot of folks who waited and waited for the pullback are going to feel an incredible FOMO when we break out early. And that's kind of what I see happening right now. You guys know that I advocated very strongly buying over the last 2 years. And so I don't feel that FOMO, but I did want to get more on the pullback, which doesn't appear to be happening. And so I think the pullback that we had on Ethereum to 2100 is likely it for quite a while. And I want you guys to let that sink in, process it, and here's where I think things are going to go. I think, one, we've got more room to the upside. Even if we pull back, I think we're largely going to be pulling sideways for a while, and the most that I see Ethereum coming back to right now is 2,300, and you're going to hate to hear this. That's way down the road. That's months from now. And so I think that this is going to be a huge FOMO moment. I think that it's still worth investing in. But you're running a higher risk because, as the saying goes, you're tardy to the party if you didn't get in 12 months ago. But there's going to be huge opportunities because crypto will give us crashes and pullbacks that are greater than 30%. They'll give us ominous red days and bad news, and those will be buying opportunities. But right now, the smart money is generating the perfect FOMO moment, and these things are continuing to climb. But because we didn't test structural support, it means that this move higher will not have the proper legs to stand on, and ultimately, in the course of time, we will have to come back and have a much stronger test of what the lower range is that we never got. But those are my thoughts on crypto today. I will cover ETH some more as far as projecting some future prices. I didn't get that calculated today. Just wanted to get this video out for you guys. I hope you enjoyed it, took something from it. Put Spotify on your list. Be prepared to be shocked by the price run up on some of your favorite cryptos. That's basically the message today. Thank you guys for joining me today. Again, if you want to get the next video, hit the subscribe button and join the Stock Josh fam. Appreciate each and every one of you guys. Don't sleep on the Discord. Peace and blessings. We'll talk to you soon.